about the economy, sir. What's your outlook on the economy next year? All good. Take a look. It's all reported the right way.
President Biden blaming the media for America's frustrations with Bidenomics as a year-end poll reveals just 39% approve of his economic agenda. Fox News contributor Tammy Bruce joins us now.
So the staff now has a noticeable slowdown in growth starting later this year in the forecast. But given the resilience of the economy recently, they are no longer forecasting a recession. I just want to know.
I think that the Fed is going to be doing everything it can to try to reelect Biden or whoever may run if Biden does not. I think it's clear that that's what's going to happen. And I know that from prior election cycles.
And of course, I agree with every word of that. But I would just raise one other possibility, which is the economy, which is, it's an election year. So it's possible now, because everything is centralized and everything emanates from the Fed, everything's about interest rates. It's possible to kind of hold markets up for a period. You're straining under the weight, but you can do it to November. That is their plan, okay? And then after that, they'll think of something else. But their short-term plan is to keep economic collapse at bay until the election. They're really, really trying hard. And they may be able to pull it off, but let's say they don't.
What is going on YouTube? It's Brendan from Market Makers. Happy Thursday, everybody. Guys, we have a big market update for you today. Of course, we're going to cover the TA in the global equity space and Bitcoin, but I wanted to make this video about solar cycles and how they affect the market. I want to show you some interesting data here on solar cycles, and you guys can decide, is this a bunch of hooey? As some of you put in the comments, oh, it's astrology, but it's not astrology, it's astronomy. It's science, it's natural law. This is why you have natural pivot points in the market, such as the equinox dates. But guys, you can decide when you see the chart. Lee, go ahead and throw the chart up while I'm talking. Let's go ahead and look at this. Right now, guys, we are in solar cycle 25. Solar cycle 25, a solar cycle duration is supposed to be 11 years. Within that cycle, you have solar maximum. Solar maximum is measured by sunspot activity, and you have increased solar activity in general. You have solar storms. You can have CMEs, coronal mass ejections, solar flares, increase in radiation output, and then you have solar minimums, where all that activity is at the lowest point. Now, what's interesting is solar cycle 25 was supposed to start. It started in December of 2019 and was supposed to end at the end of this decade in 2030. Now, how does this affect the markets? Well, as on this channel, we like to look at history. This is how you can decide. You can look at the history of the marketplace. Lee, go ahead and highlight for me 1929. This chart, guys, which comes from the government, since so many sheep out there trust the government, but this chart comes from the government. Let's look at solar cycle 16. Lee's highlighting 1929, the largest stock market crash in U.S. history, and then leading into the Great Depression thereafter. That occurred at a solar maximum, as you can see on the chart. Let's go ahead to the Nifty 50. Fast forward, lead in 1972. Look at 1972, the second largest break in stock market history. The S&P fell 67% during this break. That occurred at a solar maximum. Remember, this is supposed to be an 11-year cycle. Lee, let's fast forward to 2000 to 2002. This is the dot-com bubble, guys. You have the peak of the market in March, the spring equinox, the bottom of the market, and a fall equinox of 2002, S&P minus 50%, NASDAQ minus 84%, Amazon minus 93%. What about the GFC, Lee? Go ahead and give me 2009. 2009 was not a solar maximum. As you can see, that was a solar minimum. Again, it's about pivots in the marketplace. 1929, 1972, .com all occurred in solar maximums, and we are approaching a solar maximum. I want to show you guys this on a news article now because we're not supposed to have the solar maximum for cycle 25 until 2030. But what happened that we are now going into a solar maximum this year? Let's go ahead and look at this. The National Weather Service from NOAA, NOAA. The updated prediction now calls for solar cycle 25, that's the cycle we are in now, to peak between January and October of 2024. This is important. I want to show you guys something else that's very interesting. Combine this with our lunar cycle videos. The earlier maximum in the new prediction goes hand in hand with the larger amplitude, since strong cycles are known to rise faster and peak sooner. It is also good news for sky watchers. It means that the total solar eclipse that will be visible from the US on April 8th, 2024 will occur near their cycle maximum. So again, guys, when you look at pivots in the marketplace, just from a historical perspective, I cover this all the time. You look at the stock market peak in .com, spring equinox. When did it bottom? Fall equinox, 2002. You look at the market bottom for the GFC. When did it bottom? Spring equinox. You look at when Lehman failed, the first bank that failed during the GFC. When did it fail? Spring equinox. When did the other banks start to fail? Fall equinox. Fast forward to the pandemic plague sell-off. When did that occur? Spring equinox. Fast forward to when we had the SVB in New York SIG fail. When did they fail? They failed in 2023, second largest bank failures in history, spring equinox. What do we have upcoming? The spring equinox. We have the EU barreling towards a recession already. I'm going to show you that in the news articles as well, because now all the news articles are getting revised. Just 3 weeks ago, the EU was going to just barely avoid recession. And remember, in the US, our economists, the banks, Wall Street, Ben Bernanke, Fed Chair Powell, the Biden administration, no recessionary forecast. All of this ties together because we also have the total solar eclipse April 8th, which is why I was telling you my 2024 predictions last video. I think the market's going to hold key support levels. We're going to go over it in the charts, look at the current activity, but I think we're going to hold key support levels and peak just like we have in previous cycles during that spring equinox, which I believe is like March 21st this year. Within a 2-3 week window of that area, you also have the total solar eclipse, and then you're going to get the sell-off. The sell-off will occur because the market has never bottomed once in history. I know you guys are tired of me saying this. Once in history has never bottomed prior to a recession. Recession is my base case. In my opinion, it should be everybody's base case because the indicators we went over last video all but guarantee you're going to have a recession. And when that occurs and that sell-off occurs, you're looking at the S&P at 3,200. You're looking at Bitcoin at 11 to 13K. The Fed will have to make a decision, just like the central banks over in Europe. What do? Do they ease and have problems with inflation, or do they let it fall because you still have inflationary issues? This is going to be a key pivot point, guys. It's an area, if it looks like the Fed is going to ease, I'm going to be looking at buying into these bottoms and riding this reinflated bubble. And if it's an area where the Fed cannot ease because of whatever reason, inflationary issues being the most likely one. But if they cannot ease, if they cannot inject liquidity in the marketplace, then you're looking at the bubble targets, which have happened twice in the last 20 years. S&P minus 50%. You had the NASDAQ fall 84% in the dot-com bubble. So this is going to be, as I said in the last video, a most violent year for volatility, which translates to a very fun year to trade. Let's do a quick news update. But before we do, let me show you what the solar cycle looks like. Again, government website, guys. Over here on the left, you have the sun. Okay, this is at a solar minimum. This is 2019. You can see right here on the grid. 2019, this is what the sun looks like at a solar minimum. Let's go ahead and fast forward this to what a solar maximum will look like as it ramps up. Okay. Watch the increase in activity on the sun. Again, this is solar flares. This is increased radiation. This is a lot of different things happening. It's a natural cycle that occurs. And it just so happens that all the great market crashes peaked. They all peaked during a solar maximum, okay? And that got pulled forward this year. Pulled forward, advanced by 7 years due to the strength and increase of the sun's activity. So fascinating stuff. Let's go ahead and move forward. Let's go ahead and look at some news. I want to show you guys some news here that's happening. And if let's just back it up. Let's just back up to November 15th. Remember when the GFC recession started, it took them a year. When I say them, the government body, to come out and tell you, oh, by the way, you're in a recession. That recession actually started the fourth quarter of 2007. They didn't tell you you were in a recession until the fourth quarter of 2008. And what happened? The stock market had fallen 57%, the S&P. So understand the news will always lag. All the people you watch on Bloomberg and CNBC will be wrong. They are all consensus soft landing. November 15th, 2023, Bloomberg, Euro area to avoid recession as inflation retreats, the EU says. So this is the ECB, panel of European economists. No recession. That's November 15th, 2023. What happened 3 weeks later? Euro area to suffer first recession since the pandemic, survey shows. The same people they surveyed before. The Eurozone will succumb to its first recession since the pandemic, with the economy shrinking for a second straight quarter in the final months of the year. That is December 11th. So 30 days later. Prior to that, no recession. All the EU leaders, no recession. We're going to escape recession. Let's go over to the news here on Euro News. Back this up one. German inflation rises to 3.7% in December due to energy prices. And then look at this. French inflation rises on higher energy prices. So you have your inflation going up in the EU area, and this ties into how you view the markets. So many people just look at charts. So many people just look at fundamentals. That would be mainly your Wall Street people and the people you see on TV. What I like to do, guys, and what I feel gives me an edge is tie it all together. Tie all of this together. Understand the geopolitics, understand the economics, understand market history, and understand market cycles. And those cycles include natural cycles as well as fiscal and monetary cycles, the business cycle of the marketplace. You have conflicts going on in the Middle East. You have conflicts going on in Eastern Europe. And this is all going to complicate the picture here for 2024 with what central banks can and cannot do. And it's going to dramatically affect the marketplace. This is a key point you need to understand. So Germany's inflation rate increased to 3.7 year over year in December, up from 3.2. So it went up 0.5%. Why? Largely due to energy prices. If you look at an inflation chart here in Germany, why are we looking at Germany? It's the third largest economy in the world, which powers the second largest overall economy in the world, the Eurozone, okay? So this is what you're looking at. You have inflation peak out, make your double top, just like a chart, and you bottom out and looks like it's pushing back up. The Fed and the central banks around the world are going to have a very difficult time cutting rates, which is a bearish activity to begin with, but cutting rates if inflation rises back up. That's why this year is going to be a lot of fun. You know what, Lee? Without further ado, we need to look at the charts. Let's go ahead and start the show. All right, boys and girls, just a reminder, if you want to support the channel, please do like and subscribe. It costs you absolutely nothing. And if you want to trade these marks, my friends, check out SimpleFX. Get up to a $5,000 first-time deposit bonus available exclusively with our link. Or if you're on a crypto exchange, check out BingX. Both those links are in the video description. I'll pin them in the YouTube comments as well. They will both pay for your first month on our Discord if you want to check out a fantastic community of traders and financial freedom seekers where we have block state updates, harmonic live streams, TA, and trading ideas. It's a lot of fun to be in a room. If you guys want to try something for 2024, that Telegram link, if you get stuck on any of this stuff, is going to be pinned in the YouTube comments. Message Lee. He's happy to help you out. Let's talk about Bitcoin first. So we had our sell-off. The ETF news is going back and forth. You're seeing sites leak news. Oh, they're not going to approve anything. They're going to ask for more time. And now the market has pretty much recovered and you're back at 44K. Let's go ahead and look at our diamond pattern here, guys, from our fractal high where we traded this breakout for a 44% move. Go ahead and highlight that. Pull your fib retracement down, and you're right at the 2618, right? 43,842. And you have this pattern that's forming. It was initially a double top that looked like it might start to break, and now you're reversing back up. Let's look at this on a daily chart because this has my fib from the upside level, from the all-time high, pull down the fib to the market low, 48,562. As I've said in my previous video, as we just talked about in this monologue today, guys, if the markets do what I think they will do, which is hold key support, including Bitcoin, I'm looking for them all to top out in March, April, okay? Spring equinox time frame, total eclipse time frame, peak activity of solar maximum. That's what I'm looking for them to top out. So the next logical step, if we keep chopping in here, especially if you get the ETF news and it comes out to the good side, you have to look at 48,562. As I said previously, if you get the 48.5, I think you're going to 50K. Huge psychological number. And then we'll have to see what the market's doing at that juncture. What is the market doing? Is the S&P and everything else rallying? Are they starting to fall? And we tie that together with Bitcoin. Near term here, we look at our projection we talked about last video, which at the point was here. We get up to the 1414. We had this nice retracement down. Didn't get up to 46.4, which is the target I was looking for to see if we get a retracement. You have to look at how Bitcoin is behaving here in trend. I'm going to do this a couple different ways. Let's go ahead and throw this into a Wyckoff trading range. Get our buying climax. Get our automatic reaction. And let's talk about these movements. First movement you want to look at, some basic TA you can get on any channel on YouTube, higher lows. You have your low, you have, this is almost a new low, but you have higher lows through here in range, and you're chopping up and down. You're forming your basic W structure, as we just talked about. But that W structure, guys, that 46.4, that's not going to hold if the ETF gets approved. That's just going to get blasted through, right? So really, I'm looking at 48.5, and that's a nice move up here from 44. What is that, just about 10%? Let's go ahead and look at this. Measure this just from current price action. If you were to come up there 10.36% to 48.5, and again, I think you get up to 50, and you may have to do a little consolidation phase here again. And if that news comes out negative, no ETFs are approved, or we need more time, I still want to see if Bitcoin can hold its key. Now, if it's no ETFs approved, you could break down substantially. But if it's just a pause or we need more time, we're going to review it in Q2 or something, I still want to see Bitcoin hold its key support, which is 40,226, the bottom of this range in the daily time frame. If you lose that, you have to start looking lower at these lower pivots, your 38K level, and of course the base of this pivot down at 33. Okay. But for right now, you're just chopping. The markets are trying to build bases. We're going to go ahead and look at those as well. Let's go ahead and look at Bitcoin on the MFI. This is exactly what I wanted to see, a reset of my oscillator for the MFI, just below the median line, going sideways, working off the overbought condition from this euphoric rise, this 44% move up that I gave you the trade for October 23rd on YouTube. Looking at our momentum, again, flat line, still at the median line. So this is just chopping, nothing much to see here. Let's go to the S&P. S&P, just like I said so far, could we break down further, right? We talked about this last video. Lots of people are giving you these dramatic targets based off fib retracements from the bottom of the rally, right? And this is common. I'm seeing it on YouTube. I'm seeing it on business news as well for the TA people. And they're looking at this. You're like, wow, the 382, the shallowest retracement is all the way down at 4,500. And if you came down to the 618, this is 4,370, all the way down to 618. Look at that drop. Massive drop. I don't think that's what's happening here. I think you're basing here. And so therefore, I view this as legs. Okay. When you're building these patterns, you have legs. This is your first leg, your base to where you started to consolidate, 12% move. Okay. I'm going to take a Fibonacci retracement off of this leg, the impulsive move out, up to this rally high, and you're bouncing right off of 4703 to 382. This is literally what I said last video on Tuesday, guys. Last video, I said you could come right back down here and see if it holds. And that's what you're doing. If you come down deeper, I'm looking at that retracement to possibly come down to 4,600 if it were to come down even deeper. But I think you're going to try to hold here above 4,650 to 618 in this area, chop around, build a base, and I'm looking for that move back up. And where's that move back up going to? Let's go ahead and look at that. We're going to take our Fibonacci again from our corrective high down to our corrective low. And I'm looking for 49.22 by March, April, the spring equinox timeframe. So you're looking at possibly mid to late March to early April. Total solar eclipse. Again, go watch that eclipse video. Go watch the lunar cycle video. Total solar eclipse, April 8th. And then I'm looking at 49.22 to 5K, big psychological number and not unreasonable at all. I think you're going to have to chop around here some, may dip down a little bit low, may try to get to that 46.50 level, but I think you're going to chop around and that's your next move up, your harmonic expansion target back to the upside, guys. So when you look at this on the indicators, MFI doing what we talked about last video, I said I think it's going to try to hold this level and do what? Work off the overbought condition, come to the median line, I'll have a wave back up. I look at my momentum, same thing, working off the condition, coming to the median lines, working it off, and we'll see if we hold this range. Let's go ahead and look at the NASDAQ. NASDAQ, again, we've hit our larger targets. So we're going to look at the corrective targets. We went over to larger targets across all the indices going back on last video, guys. So we'll just look at the corrective targets here on Fibonacci, corrective high to corrective low. The NASDAQ outperformed, as you guys know, on the way up. So the 1618 harmonic expansion, a measure of proportionality, is at 17.1, right? We almost got there on this move. And again, this is what I told you. When you look at these moves, if you get some type of rotation that everybody's talking about, oh, big tech's not going to lead, it's going to go somewhere else, small caps, value, whatever. If that's true, then watch for a three-wave pattern, type top pattern to print here, if that's true. What's more likely to happen, especially with the most retail money in the marketplace ever in U.S. history, the favorite stocks are still going to be the favorite stocks, I think, going into this year. They'll still be relatively strong. Even though the 1618, 17.1, if we look at the S&P and it makes that move towards 5,000 in the next couple of months, I would expect the NASDAQ to outperform. So you'd have to look at your higher level targets, but we won't know that until we start seeing how it reacts. If it does wave back up here, 17.1 was the 1618. Key harmonic expansion target. But if you're looking at the S&P going up, maybe we're going to be looking at the 200% retracement, 17.8. And again, if it goes crazy, you could be looking at 18,975 up here at the 2618. That's a ways off. Let's see how the market reacts. Don't want to predict that far out as far as the price action. But the timeline, remember, time is more important than price. The timeline for when this is going to happen, again, this is this quarter. Q1. The recessionary indicators we covered last video are absolutely telling you you're getting a recession. The market will realize it at some point and you will see the rush to the doors to dump. But I think we got more upside until that happens. NASDAQ, MFI coming back down as well, working off this overbought condition, momentum rolling down as well. And again, guys, just watch this. Key potential three-wave pattern. And you may end up chopping, right? You may end up getting a five-wave out of this. You come down, you come up, you come down, you come up, and then you start building a pattern, making these higher lows your W pattern, and that could be your breakout to the upside, taking out that fractal. So you just want to watch how these develop and form. Looking at the baby S&P, performing nicely as well. We can take our corrective high here on Fibonacci down to our corrective low, broke out of our channel that was tracking beautifully. And we got right up to the 1618, 37,795. Again, this is what I was talking about. You had the Dow outperformance, you had the NASDAQ outperformance. So you could see the Dow move to its next level targets if the S&P builds a base and does start to move up like I expect it to, okay? But right now, 37,795 is your key resistance. That's your harmonic expansion, and you're right up against it. And you failed from there, went down 400 points, and now you're just back testing it. So we want to see how these patterns develop. We look at our indicators. Again, you were overbought in the daily. MFI coming back down towards the median line, momentum cooling off. This is all part of that process of what I think is going to happen here in January. Will take time to develop. Let's go ahead and look at the Russell. The Russell, the quickest turnaround from a new low to a 52-week high. I think, in stock market history. And so it did this, it got up here, and this is my Fibonacci retracement from the all-time high, right? We got above the 50%, 2048, got above it, 2146 is above that, and we have this move, right? We have this move, again, just like the NASDAQ. Want to see what this does. We're just going to make a big double top here, or we're going to come out on top of this Wyckoff range, pivot up, maybe base, again, do the W pattern and come up to a higher level, 2146, 2285. The Russell is still well down off of its peak, something down almost 20%. Well, now more than 20% from its all-time high. You hear the media narrative. It's important to understand narratives. The media narrative is what? Small caps. I like small caps. You hear them say that over and over again. Why? They're looking at it as a catch-up trade. They want to believe that this is going to rally because small caps traditionally lead large caps. They lead them on the way up. The Russell peaked in November of 2021. The NASDAQ peaked after the Russell. Now, the Russell and Bitcoin peaked within 48 hours of each other in November 2021. And then the S&P carried on until January 2022. This is all important information because the Russell never rallied. You know why? You know what does the worst in a recession? Small caps. 40% of the Russell does not make any money. They are called zombie companies. They make no money. They rely on financing. They rely on external funding sources. This is why it hasn't rallied. So ostensibly, it's really weak, which would be fantastic to see it rally even higher going into this end of Q1, March, April. Okay, but those are my next upside targets. And you want to see if you can hold this level up here for the Russell, because you have this same pattern, right? You have the M pattern forming here for potential double top or pivot out to the upside if you can take out 2080. And then we're looking at those higher level targets. And again, the Russell got overbought, the most overbought on a 3-day chart in a decade. Okay, a decade. Now it's waving back down. Momentum starting to cool back down. You want to see if you hold this level. We're most likely going to build a little Wyckoff, mini Coff structure up here, close to the top of our larger Wyckoff structure that's been going on in place now for almost 2 years. Let's look at the DAX. The DAX formed this beautiful pattern as well. And again, we have our Fibonacci pattern that I showed you guys how to pull last video, so I'm not going to do that all over again. This is a German market. Look at this 3-wave pattern that formed. We talked about it last video, how this could just be your pattern, your 3-wave pattern, 16.9 being that key level you broke down. But let's look at this, right? So you found support. This is what I think is going to happen in all these markets. The European markets will be barreling towards recession ahead of the US. But let's go ahead and look and see where we fell to. If we go ahead and pull this. So on M patterns, by the way, to answer a user comment question, when you have your M pattern, like I just showed you, there's a couple different ways you can measure Fibonacci. I'll show you on the video as well. But what I like to do is go from the lowest point here in the M pattern, pull a fib up to that second top, okay, that second top, and see what fib level it hit. My 1618, 16,422. We got down to the 1414 at 16.5, and now you're getting a rebound. But look where you're finding your resistance. You're finding your resistance right at that one fib, 16,635, your fractal low there on the pattern. Let me take this off so I can draw it so you can see it. Let's go ahead and put this on here. Now, despite the economic conditions in Europe, if the US markets rally, I anticipate you're either going to be chopping in the European markets, if not rallying, even though you're in a more advanced state of recession right now, barreling towards recession. You can see 16,630, your fractal low is providing resistance, right? So if you watch supply demand traders, very basic trading on YouTube, they'll tell you, oh, don't predict this pattern. Don't trade this pattern here. What you do is you wait for price to fall, come back up and back test it. Nothing wrong with that. But if you don't understand patterns, you miss out on opportunities. But again, I'm not looking to trade this here because I do believe the US markets are going to base and move up. And then I think you're going to see this in the European markets as well. But right now you're stuck at 16,630, and then 16,903 has provided these resistance points for you here along the fibs. That's going to be really key to watch. So look at our indicators really quickly. MFI below the median line, which is good. If you can hold in this range, let the MFI get to oversold, it'll start waving back up the other way. We want to see if it waves up to chop or waves up for a fractal breakout. Momentum, same thing, cooling off, going slightly negative. So look at the Paris market. Paris market, same deal, guys. You got a dirtier double top here. You had a lot more weakness here in the Paris market, and you fell where we fall to here. You fell right to the 618 at 73.83, taking it from this leg right here at 72.16 up to your high. You fell right to the 618 and bounced off. So I think on the Paris market, particularly, even if the US markets want to pick up, you're going to be building potentially a massive three-wave top. Look at this. This is what you did before, and you're doing the same thing here. So let's see how this reacts. If you come back up and get a lower high in the Paris market, maybe even get back up to 75.75. But we're going to see, guys. All this is going to take time to develop. We don't know yet because we got to see where the U.S. market's based. Are they basing where they are? Or are they dropping slightly lower, maybe another 100 S&P points and then basing? Because that's going to affect, obviously, the patterns you see in the international markets. Paris market came down to the median line on the MFI, sharp move down, momentum down. Everything's down, but you're holding 73.83. Your resistance right now is 75.75. Let's look at the video. This is a good one to show you. So again, when you're looking at W's and M's, we talk about that all the time on this channel, the Ponzi patterns at play in the market, W's and M's, okay? There's your W, here's your M. You have smaller M's within this as well, your double tops, to use normal nomenclature for chart patterns here, your three-wave pattern. So when we look at this, can measure it from this fractal low for Fibonacci up to that second top. Again, you came down to the 1414, 473 on the video. So you're holding these ranges, guys, and you can still see in your basic TA method, your low, your higher low, your higher low, right? So you're still seeing the exact same thing here. They're holding these ranges. They're chopping around. You want to see if you can get above 502, which most likely, if we are rallying up towards 5,000, 49.22 or 5,000 after a base, then you're going to see this break out, okay? Now, if we start breaking down, remember, there's more bearish catalysts out there in the marketplace. Inflation, economic data, war. There's more bearish catalysts than bullish catalysts, but just the natural business cycle of the market, the euphoria in the market, the Ponzi salesman on TV, the Ponzi salesman on YouTube. I don't think this thing is done running yet. So want to watch and you look for your steps for breakouts. Get on top of 502, pull back, break out to the upside, see how this behaves. Still early in this retracement, okay? So let's just see how it behaves. Let's look at Tesla. Same thing. We had our 30% equidistant retracements. We came down here. We were trading in this level between 246 and 259. Now you're basically between 234 and 246. So you want to see Tesla has this larger bearish pattern going on here. These are your potential three drive pattern, right? Here's your two drives. Could be forming that third drive, these equidistant 30% moves, market symmetry. Or are you trying to view this more bullishly perhaps and just look at this as your low, your higher low, your higher low, still your higher low? Now, with the markets basing in my view of the markets, then obviously Tesla would have more upside. But again, too early to tell you. It's just drifting slightly downwards. We'll look at this come our Monday video as well, see if we've made any changes in the next today and tomorrow's trading day. Gold fell with the markets. Isn't that weird? That's so weird, right? Because gold moves independent from the markets. No, it doesn't. It moves with the markets. And that's why gold will sell off when the markets sell off. Gold is great during or after a recession, after gold sells off. And it's not gold selling. Gold doesn't sell off because everybody goes and cashes in their gold, their physical gold they have. Gold sells off because 80% of gold is paper traded. 80% of the paper trading is done by Citi and JP Morgan. Two banks control all the paper trading of gold, okay? That's why gold sells off. In the GFC, it fell 34%. Silver fell 61%. They bottom before the markets. They rise back up. I think the same thing will happen. But in the intermediate term here, with the markets moving up, gold is moving up as well. So we have our targets we talked about. You got to get on top of this range. 2075 has been a killer. You already have your pivot right here. You got to get up here. So you pulled up, you fell back down. You want to try to build this pivot, break out to the upside. And again, if we get to 5,000 gold, gold could come to 2136, 2173, or 2225. We'll see what happens with the S&P, but that's what I would expect gold to do, is move with the markets both up and down initially in the cycle before you go into a commodities potential super cycle. So we'll see how that plays out. Guys, hope you enjoyed this video. Once again, leave me your comments. Have a fantastic weekend, everybody. Thank you so much for watching, and I'll talk to you guys Monday. Take care.